Good morning, everyone. Good morning. Welcome to Trading with Sergio, Wednesday. How's it going? Sorry, I'm about an hour late today. I had to do a whole bunch of trades. Just wanted to clear the air a little bit, clear the account, and I needed to focus. So here we go. Wednesday, as the title of the live stream indicates, is this a dead cat bounce? Because everybody and their uncle is talking about it. It probably won't be. We did get oversold. We did get the bounce, face ripping bounce yesterday. And if we're in a bear market, we'll find out soon. But these rallies in bear markets are very common, and those rallies should be taken advantage of to lighten up, because markets open every day. We don't need to chase things. So I had a bunch of positions that had profits. So take some of those, put credit spreads, call credit spreads, directionals, specifically on Google. It got to my target and I got to take the profit. So, but now I'm almost 80% cash. We'll wait for the dust to settle. As we know, President Trump is speaking tonight regarding the Iran or Middle East crisis. It seems like there's a lot of talk going on, and yeah, I don't know. I don't know what's going to happen, and we don't want to take chances. I may be shorting some ES futures shortly, but we'll see. I don't have much to hedge, honestly. So I'll go through what I did today, and none of this is trading, financial, or investing advice. What I do is very risky. If you're going to follow me, do your own due diligence. And it's important to understand that when the markets are this volatile, whatever you're going to do, there is a high likelihood you're going to be wrong. If you pressed on the downside, you're wrong last couple of days. If you pressed on the upside and you got lucky, pick the bottom, take your profits. Don't let a green go to red, as my members know that very well. And if you're red and you get back to break even with this rally, I would take that. Break evens are sometimes the best trades that you can put on. And when the market gives you a chance, a second chance, after you getting in the hole, I would take advantage of that to lighten up. Again, markets open every day. Wait until the dust settles. We'll get back on routine again. But if you did trade, because volatility is high, you sold some options, you have some profits, I highly recommend taking it. Again, none of this is trading, financial, or investing advice. I post my positions, by the way, every Monday, Wednesday, and Friday. I post them for my Telegram chat group every day at the end of the close, at the end of the market close. But I post it for the regular subs of the channel every Monday, Wednesday, and Friday. There is definitely a lag, obviously. And like if you look at the positions that I posted on Monday, and I will post again today, it's going to look very different. The reason is short-term trading is short-term trading. And since there's a lag between the posts, you may not fully take advantage of it, but you can clearly see what direction I'm taking on the trades I'm putting on. You'll have an idea at least. I'm not doing it to recommend trades. I'm doing it mostly for you guys to understand the way I trade. The way I trade is very different than many folks. Okay. And but I have a full toolbox, and I deploy all the tools in the toolbox because there is a time for each one. I've said this many times to my group before. We're like carpenters, let's say, right? And we have all the tools. We should have all the tools, because there may be a tool that you use only once a year. But then if you don't have it, then you're not going to be able to apply it, and then you're going to use the wrong tool to do the right job, and you're going to mess it up. And trading is just like that. You have to have all the tools. You have to almost feel like you're an autopilot and patiently wait until the trade presents itself to you, that's because of the underlying has gotten to your point. When you get to the target, you put the trade on, you put the correct trade on. Sometimes it could be selling puts, sometimes it could be selling calls, sometimes it could be iron condors, sometimes it could be just selling put credit spreads or call credit spreads. And that's when you understand that you have a full toolbox. And once you have that, you put the position on, then it's up to Mr. Market, right? Nobody, and including myself, nobody knows what the market's going to do from minute to minute. There are people on social media, YouTube, on X specifically, they all say, oh, yeah, 100% win rate. And it's bullshit. Nobody has that. It's run the other direction. These types of charlatans are out there because they want the attention, I guess. I couldn't care less about any of that stuff. What I want to do is I want to share my 30 plus years of experience with you all. And that's something you cannot buy or teach. And having seen all types of markets, all kinds of conditions over the last 30 plus years, that is my edge. You know, a lot of people say, what's your edge? Well, my edge is having seen the movie multiple times before and not anticipate things, but then, you know, anticipating things is going to make you wrong. Assuming things make an ass out of you and me. It's more important to understand that if you're new to trading, again, there's a big difference between trading and investing, but a lot of traders become long-term investors, unfortunately, because they cannot take the L. The point is, trading is completely different than investing, and we're all short-term trading, obviously, through options, futures, whatever we do, day trade, swing trade. First, find out what you're good at, who you are. Figure out what you're good at. You don't have to be good at 10 different things. You have to be good at one thing. You have to be great at one thing. But then the more experience you accumulate, the more years go by, the more, you know, market reactions you've seen to all kinds of conditions, then you can expand your horizon, expand you know, you have a full toolbox, you deploy all the tools. And if you're if you're trading the market strictly by technical analysis, yes, create some tools. But then don't create biases, because you listen to the market, learn how to listen to the market. The market's telling you something. Or a stock, if you own a stock that's down 50%, why are you in it anyway, right? You know, reassess. Has your thesis changed? And then, because a lot of people just think that if something is cheap, it's cheap. Well, cheap is relative. Look at Nike, for example, today's victim. Nike has been in its own bear market for the last 3 years while the market was making all-time high after all-time high. So the point I'm trying to make is, don't be a one-trick pony. Figure out who you are in the market, figure out where you belong, and then try to be great at that one thing first, and then move on. Because I feel like a lot of people, you know, gravitate towards what's hot, right? Oh, today I sell puts. Oh, tomorrow I do wheeling. The next day I sell iron condors. The next day I trade zero DTEs. You can't be good at everything. You just cannot be. And once you figure out where you are, then cool, you know, expand your trading platform. You know, try to do different things, because each trade is a separate deal. You're just making a deal with a counterparty. Well, that counterparty's opinion about that trade you're about to put on is completely opposite of yours, right? So always understand that, you know, it may look like a no-brainer to you, but then to the other side, it looks like a no-brainer to them. Because if you're buying a stock today at a certain price, somebody's selling it to you. Understand that. You may have conviction, you may have a thesis all in your head, but then the price is the price. Why is there someone readily available selling it to you? Because their opinion is diametrically opposed to yours. They think it's going down. That's why they're selling it, going down further. You think it's going higher. Okay, that's how we make a market. But then nobody knows what's going to happen to markets other than probably President Trump, who can tweet something and get your face ripped off. So with that said, you know, size small, wait until the dust settles. You don't have to be involved every single day. This is not, you know, a lot of people say it's gambling. To a point, it has become gambling with zero DTs and things like that, all the other products that are out there. But understand There is risk involved in everything. There is no freebies on Wall Street. There isn't any. And with experience, you will learn that. You'll pay your tuition. You will learn that. There's no perfection. You just kind of read the tea leaves and put a trade on. When you put a trade on, I'll go through the trades that I closed today. When you put a trade on, you're dealing with probabilities, okay? But then that doesn't mean, even if you have high conviction, that trade cannot go sideways and cannot be a loser. And that's when the ability to take small L's, okay? There's lowercase l and a capital L. While it's a lowercase l, taking the L is a lot better than waiting for that to become a disaster. And then now, not only you're missing opportunities, other places that you could be making money in, but now you're stuck, okay? And if these types of rallies over the last 2 days saving you, good. Lighten up. Don't be stuck. Don't be stubborn, because you don't know. I mean, you just don't know. Everybody has an opinion. Opinions are just opinions. I have an opinion. I have probabilities that are on my side when I'm putting the trade on. I'm not blindly going and putting them. I have a thesis, or even in short-term trading, I have an idea of what I'm supposed to do. But then again, it's up to the market. So when we got 10% drawdown, peak to trough, we had a 10% drawdown before this last 2 days worth of rally in SPX. Well, during that time, a lot of stocks got smashed. They went down 50, 60%. So it's not just the stock market, it's a market of stocks. If the stock you're dealing with is down 50%, also now understand the math, that stock has to go up 100% for you to get back to break even. That's a tough game to play. The game's already tough as it is. And if you allow wild fluctuations of 50, 60% on your account equity, and if you experience those types of drawdowns, understand the math. The math is against you. So 50% drawdown means you need 100% now to get your account back to an all-time high, which is a very difficult game to play, especially in markets like this. So keep your drawdown small. Again, this is trading, okay? Keep your drawdown small. Sometimes turn the computer off and go away. I, as a trader, I know from myself, I have hot periods and cold periods. Every trader experiences this. My experience says that when I'm hot, I press. When I'm hot, meaning that everything I touch, everything I'm doing is working out. Those don't last. I know that very well. The other side doesn't last too long either, right? When I'm cold, okay? When you're cold, what do? You cut down size. When you're hot, you press. When you're hot, you let the winners go a little further than you thought it was, even past your target levels. But the most important thing is when you're cold, take those small L's. Yes, small L's are going to bleed you down, but then they're going to bleed you down a little bit, not much. And the comeback is going to be a lot easier, mentally, financially, spiritually, every which way, emotionally especially. So because taking a punch every day in the face, like we've experienced over the last month or so since the crisis started, is not an easy thing to do. And I know this from my Telegram chat group. When the market's going down day after day after day, the chat gets quiet. That means what? Everybody's still positioned probably 100% to the long side. Well, that doesn't work because, people don't understand that the stocks go up, stocks go down. I mean, there's no two ways about it. So when your port is 100% long, you have no hedges on through futures or index options or puts or whatever, and you're bleeding, it's going to keep going on and on and on until you get frustrated and sell. And a lot of people say, oh, I sold and it went right back up. Well, yeah, because that's what the markets are supposed to do. They're supposed to frustrate you and then bleed you out and then turn around. So look, trading is tough as it is. Don't create more problems for yourself. When you have a small L or a break-even chance with this last 2 days worth of rally coming up, your big L just became a small L, or you're break-even, or you have a small profit. Just take it, because the market is good enough to take it back from you. So anyway, that's what I wanted to say. With that said, good morning, Mike. Good morning, Ernesto. What main gig with it? I mean, what do you mean? It's just a hat. It's another company I have, Gigbitted. See you later. What's up, see you later? Isn't it a market maker selling it? So not necessarily. It could be the other side of the trade. Could be somebody else taking the other side of the trade. But most of the time, if you're trading options, the market maker is on the other side of the trade. Yeah. Not always. On active options, retail is trading. You could be trading against other retail, right? Especially NVIDIAs and Teslas and Googles and things like that. It doesn't have to be just a market maker. You don't know who it is on the other side, but there is somebody on the other side with a diametrically opposite opinion of yours, right? So, but most of the time, if there's not enough open interest, especially in options, market makers taking the other side because that's their job. Dealers, market makers take the other side of the trade, and they don't gamble. They're not in the business of gambling. They're in the business of being delta neutral and making money. So, you may be taking a directional bet. For example, the Google trade I put on. I bought calls. I think I had 70 calls. June 350, low delta, way out of the money. Stock down to 270. My 272, whatever it was. And my thing was, okay, we're right at the 200 EMA. I put the trade on. It's a pure directional trade. We're going to get a bounce to 300, which is the 50 EMA. It worked out. Doubled it. So to me, it's like there's no ifs and buts about it. And then you take the trade, and then I sold it a little bit too early, but those directional trades make your year, Hey, Mr. Premium of the option 888. Happy Wednesday. CSP collateral interest payment hit today. Okay. Love double dipping. Okay, cool. I guess Robinhood is allowing that these days, right? And cool. And hope you're hanging in there, Mr. Premium, because it seems like you're always in a good mood, which is great. And so what do we do today? Well, let's go take a look. And then what did we do today? Well, we took some bunch of profits. Account is almost flat. It's not flat, but it's as flat as I could be. I'm always in something. But all right, what do we do today? The positions. I'm long 1,500 shares of a stock called AM PST. It's an Irish auto seat maker, big company. Holding on to that. I had so there was an inverse correlation between crude oil and precious metals, and on the dip, I thought silver got oversold, oil got overbought, and I go, okay, it's time for a mean reversion, kind of a rally. So I had bought actually. I had sold put credit spreads 2017 on AG First Majestic Silver, April. This was about 10, 12 days ago. And I had sold a put credit spread 2017 put credit spread and bought a call debit spread 2025. Stock had a rally on the last pullback of oil because metals rallied. I sold the call debit spread side out, made good money. And then you're just waiting for a theta decay. And then stock bounced to 22.5. Okay, I had sold them, I think, at $1.40 the put credit spreads. And my rule of thumb is when I'm selling put credit spreads, I try to take 50% of the win. And today I closed it at 40 cents. So that's about 70%. And I don't have to wait 3 more weeks. Anything is possible. Forget 3 weeks and 3 days. So I took nice profits there. I have put credit spreads on BABX, which is the 2X ETF of BABA. I have a little bit of a loss there. I'm nursing it. We'll see what happens. I don't mind actually getting assigned these shares. I think the Chinese names are way oversold. There's the Google trade. I had 70 Google June 350 calls that I bought. I think my cost was like 225. I sold them all at 325 to 350 range today, which is great profits. It's like close to 6, 8, 10K. I don't know what it was. And Robinhood, Hood, HOOD. I'm short 10, April 17, 10 put credit spreads. I've sold at 214 credit. Those are the 65.60s. I'm going to hold on to those. There's a lot more meat on the bone. In fact, I may add to those. And yesterday, in fact, yesterday I sold call credit. So I'm turning bearish on oil because of backwardation, and I think oil is going to be a lot lower in the next couple of months or so. And a lot of the oil stocks have rallied like high-tech stocks. So yesterday I sold some called credit spreads on ExxonMobil. I sold them at like $2, and today I bought them back at 60 cents. In one day, that's 70%. You got to take those kind of profits. So overall, looking at the account, what am I? I only have now, so Excel. I'll post these positions on the YouTube page. So whatever I highlight is open. Google be closed. That was a great trade, really. And then this is open. This is open. And AG we closed. So we have 1, 2, 3, 4 positions, down to 4 positions. And then, we'll see what we do. And yeah, we're selling off now. Actually, I should have shorted the futures before I started yakking about it, to be honest with you. Let me take a real quick look here, folks. Hold on a second. Yeah. Okay. Yeah, so yeah, I mean, we'll see what's going to happen. I'm down to 4 positions. One is an equity, the other ones are for credit spreads. On hood, definitely will add to it, actually, if we pull back a little bit more. They expire April 17th, by the way. Let's see, my hood is at 474 for the puts, 260 for the long put side. So that's, what is that, 214 credit, pretty close to 50%. And if I were to sell some more of those, where would that be? I do like hood. About 65, 60 is pretty safe, actually. And again, anything is possible, folks. Those are wild moving stocks. So 65, 60 dollar credit. Now five wide wing dollar credit, not enough. Maybe I'll add to it a little bit in the next few days. There's still 3 weeks and Friday markets are closed for Good Friday, so tomorrow's the last day of the week. I'll just hold off a little bit longer. Yeah, I definitely want to get back into Google. Yeah, that's why we sold it right at 300. That was my target, and I sold it about 296, 297 actually, a little bit before, and bought it at 200 EMA. I mean, those are your probability trades that you're putting on, and everything else I closed. I will definitely sell some again. This time I'll roll it down to probably 165, 170 call credit spread on ExxonMobil and Phillips 66, and I think those stocks are topping here. And yeah, we'll just now wait and add to hood. If we pull back to 67, 68, I'll add to maybe $1.50 range, collect some more premium. And so what else is going on? Let me take a real quick look here. Hold on a second. Yeah, I think I'm gonna, let's see where SPX is at. Yeah, we bounce right exactly back to 200 EMA. That's why I said that can't bounce, or for real, I think it's a that can't bounce. I don't think this is the ultimate bottom. I think we're going to have, yeah, I'm going to cover that real quick. Give me a minute. Give me a minute. Good. Made some money on that one. Okay. Yeah, we're selling off right at WeWap now. So we should hold here. And if we don't, it's okay. That's why I closed the positions, folks. Yeah, I definitely want to get back into those Googles for sure. Same Junes, maybe July's this time. They're back to where I sold them. So, okay. And they got up to 410. I had another, I think I left like 3-4 grand on the table. But great profits. So let's see if you guys have any questions. If anybody wants to come on, by the way, you're more than welcome to do so. Here's the link of the StreamYard. And all I ask is you're in a quiet place with a good internet reception. We can talk about anything you want to do. You think AAP is a good chart? Oh, you're with well, Thinkorswim, I guess, right? I'm on Thinkorswim myself. I like the platform. I think it's very reasonable. Well, they have been doing that at Schwab for a while. Robinhood, I think, just started maybe like a month ago or a couple of months ago. Do I think AAP is a good chart? I don't know. We'll take a look. We'll take a look. Coming from you with 750 positions, Mike, I don't know. I don't know how you do it. And I don't know if it's the right thing to do. Do I think AAP is a good chart? Advanced auto parts. They're probably bleeding, probably decent at this point. Yeah, I like it. Looks nice. Looks like a little bit of a technical jargon, cup and a handle kind of a thing. Well, actually, I'm going to put that on my watch list, Mike. Make you proud, sir. Truly, I'm just putting that on my watch list now. I do like that chart quite a bit. Yes, sir. AAP. It's on my watch list. There you go. I'm open to all ideas, folks. I don't know everything. Well, I know pretty much whatever there is to know when it comes to trading, but I always like new ideas because my eyeballs, I have two. It goes so far. Doesn't go more than that. And so, yeah, I do like that chart. It looks nice. Probably a good put credit spread seller on that one. MACD turning up. I do like it quite a bit. So let's just go through some charts. And look what's going on with metals and oil and everything else. And so here's SPX or SPY. So we did have a breakdown. We did today's bounce took us exactly to 6600, 6605 range on SPX. Actually, let's look at SPX, still SPY. Same thing. But so we did bounce back to resistance, which is 200 EMA, MACD under zero. We should have resistance up here. How do we get rid of this resistance? Well, we go either sideways to lower, build some sort of a flag thing. Is this a V bottom, just like every other bottom? I don't know. I'll let the market tell me what it is. Definitely resistance overhead. If not at 6605, 6608, there's resistance about 6700. I'm a seller when we get up there until the market proves itself otherwise. Triple Q, same thing. Same thing. Just bounce back to 200 EMA from oversold levels. Volume yesterday was decent, though. That's one thing I caught my attention. TLT is inverse indicator of the 20-year bond. So if TLT is going down, rates are going up. Rates have been going up due to USO, which is the crude oil ETF. Look at that, folks. Look at that. It's parabolic. I am definitely trying to short oil. Backwardation is definitely in play, and I want to take advantage of it. So how can we do that? Either USO short, obviously, or sell some call credit spreads on USO. I am willing to. There's not enough money, though. That's the problem. I looked at it yesterday. They have weekly options, which is good. I can go all the way to April. So index is 125. I can go to maybe like 130, 135. Call credit spreads. Just sell some of those. Let's see how much they are. Sell. Yeah, 180 credit. No, 160 credit. Not enough. See, my rule of thumb is take about 250. The closer you get, obviously, you're going to take less money. I can go a little further and get to my $2 out of it. But it is so volatile that when you're selling but then at least you have defined risk, right? You know what your max loss is going to be. Max loss is 5. If you're taking in 160, okay, max loss is going to be 340. So I do like, I don't mind selling these. They're out of the money, obviously, by about 3%, but their oil is moving 3-4% every day. So if you go to 135, 140s, that's a little bit more comfortable. And but they're going to take less money in, right? You're still risking 5. Yeah, they're $1.20. Actually, they're better than the other one. So in order for you to get trouble, your break even is 140, 145, is 140, 120, and we're at 124. So that's 17 points. It's about 11, 12% for you before you get into trouble. And data decay is definitely going to start kicking in here. So I may do something like that, but I definitely think oil has topped. And so regardless of what happens in the Middle East, by the way. And okay, so what do? We can do that. We can sell some of those. There's definitely bearish divergence developing here. I'm not going to do it until it happens, though. Once the bearish divergence kicks in, because my charts are pretty clean. I have MACD on the bottom. Definitely looks like bearish divergence to me because market made a higher high. MACD hasn't. So has that look? I don't know yet. But once we cross over, we get the secondary sell signal. I will definitely not be fearful. In fact, I may go at the money, put credits, call credit spreads, and sell some of those. Can also short USO, or you can buy SCO, which is the inverse ETF of USO. You can do a covered strangle with SCO, buy the shares, sell puts, sell calls. You can do all kinds of things, right? So that's what I was talking about when you have a full toolbox. Like within a minute, you can come up with 10 different ways, 10 different structures for your trades. So you need to have that. You need to be comfortable thinking like that. Otherwise, don't mess with it. But I definitely think ExxonMobil, let's say, has topped. I covered my call credit spreads in a day. Definitely bearish divergence happening there. You can do the same thing on Phillips 66. Same thing with BP. Same thing with Valero. Just sell call credit spreads, folks. Like if the top is 260, let's say, okay, go up, sell 260, 265, call credit spreads. Because stocks go up, stocks go down. So the only thing I have left is Hood. I have put credit spreads. You guys can see where I did it. 65.60 going out to April. Stock's still bearish, folks. But I put my high end at the low of this move, of this reaction move. So I'm comfortable with that. Let data decay work for me. A lot of people are talking about SoFi as usual. I mean, stock is just can't punch itself out of a paper bag. It's 15.5. With the market rallying, stock has only rallied like 40 cents. Okay, we rallied 5% almost from the low to high today. It is crazy how people are just stuck in the same damn stocks, man. So my long-term port got a little beating, but then let's buy and hold. So I'm not going to mess with that. Same 5 stocks. I'm looking to add Novo Nordisk to it, about 30, 32 range. We're not there yet. So I have Lululemon. I'm down about 10% on that. My cost basis is 182. Actually, I'm down more, about 12%. I'm long UPS at 96. We're at 98. I'm long Netflix at 83. We're at 95, comfortably above. I'm long Kava at 59. We're at 80, so we're fine there. And I'm long Google at 152, which I bought in April. We're at 300, but I have May 350s written against it at $26 a couple of months ago. And so that's investing. Trading, investing, 2 different things. So you have to treat them separately. And that's it. That's my long-term port. Trading-wise, not much, man. Just close positions with profits, take the profits, book them. And then there'll be trades. And I'm definitely going to sell ExxonMobil call credit spreads if we do bounce to 165. I'll roll them down from I had the 170, 175 call credit spreads. I bought them back at 70%. I'll sell the 165, 170s if we do bounce. The same thing on USO. You just got to go both ways. You can't just be a one-trick pony in these markets. If you have questions, post it. My 52-week high list is working beautifully. It's giving me a lot of good opportunities, good looks for different groups of stocks. Please create yourself a 52-week high list and a 52-week low list. If you're bearish, you can keep shorting, selling those, selling call credit spreads on those. And here's my point about not selling stocks. Here's Nike, folks, okay? Down to 45. All right. So this is just 1 year, 1 day. Let's take a bigger, longer perspective. Here's Nike going back 3 years. 3 years ago, stock is 130. Today, we're at 44. Okay. If you're selling puts and saying Nike is great, you keep getting assigned or you keep rolling and you're poor, very poor. Did it have rallies? Yes, it did. So this is just 3 years. In 3 years, how much has the market gone up? 70%? Index? Nike is down, what, 80%? There's same thing with PayPal, same thing with HIMS, same thing with all these stocks. Here's 10-year Nike, 180, down to 44. Where is it going to bottom? I have no goddamn idea. And I don't want to touch it. And here's Max on Nike. Nike is basically selling where it was selling, literally, no joke, folks, in what it was selling at 2015. Now, a lot of people are going to say, well, that's cheap, Serge. Is it? Is it? You could have said that on Nike from 180 all the way to 44, right? And you're in the poorhouse while you missed all the market moves that you had. Same thing on PayPal, right? People are going, oh, it's cheap. I'm like, the market? I don't think so. Here's PayPal, 310 down to 44. It's not cheap, folks. Cheap means nothing to me. Could PayPal get cut in half again? Yes. Could Nike get cut in half again? Yes. Are they decent companies? Absolutely. But then I don't want to catch a falling knife. I don't want to deal with these headaches. I just don't. Same thing on Novo Nordisk. Now I may take a shot. Because my long-term port doesn't have anything pharmaceutical in it, and I think it's a decent company. Could it go to 20? Stock is 36. Could it go to 18 to 20? Get cut in half again? Yes, it could. Here's a stock that was 148. We're down to 36, down 70, 80% in these cases. While you missed if you just DCA'd into an index, you would have gotten 75% last 3 years. If you're holding Nova, if you're holding Nike, if you're holding PayPal, if you're holding HIMS, you're down 60, 80, 70, 80%. I mean, this is how you go to the poorhouse. And I'm not going to do that. I'm definitely not going to do that. So that's it. That's where the markets are at. And, see what I mean? No. There you go. There it is. Nope. Not with your money. You can sure go ahead and do it, though, man. How many dips could you have bought on Nike and you're broke? And this is the mentality that I'm trying to eradicate off the face of the planet. It's cheap now. Buy the dip. Okay? Go ahead. Buy the dip. I wouldn't buy it with your money. But again, different strokes for different folks. People think things are cheap. There's no such thing. A stock can go down 50% indefinitely, not hit zero. Again, Nike is a great company, I'm sure. It's the wrong end of it's on the wrong side of the planet at the moment. Let Nike bottom. Let Nike turn. I'd rather catch it from 60 to 150 or 60 to 100 than try to guess the bottom here, suffer with it, go into 30, go down 30% to make money. You cannot trade like that, or you cannot invest like that. You need to pull the trigger at some point. You need to say, I was wrong. Because there are a lot of people that stubbornly hold on to things. And I'm like, okay, it's your money, man. It ain't my money. It ain't my money. Do whatever you want with your money. We're all adults. We make our bed and we sleep in it. So bottom line is sell at least half when you. This depends on the situation. Like today, I sold all of the Googles. I mean, I had 70 lots. That's a lot. But then when you're looking at probably in hindsight, yeah, I should have probably done that. But then I don't pay attention to the past too much. I always look forward. A lot of people say, well, yeah, sell it, take all your money out, play with house money. There's no house money, man. That's another thing I'm so irritated about. There's no house money. It's your money. There's no house money. Who comes up with this stuff? I don't know. You'll definitely take a profit, number one. But it's up to you. Your account size, the way you structure the trade, your target. If it got to your target, why not get out of the whole thing? You could be wrong. You could go higher. Or it could turn around and go lower. I'm not good enough for that. But I know how to take a profit. Right? Bank it. To me, the important thing is, you could once you have a profit, you can apply anything you want, any strategy you want, because as long as you don't let green go back to red. So, but if you're in red in something, and most of my trades, I'm usually early. You know, I get in the whole couple days, but then it works out. So the point I'm trying to make is that's up to the individual when to take profits, how much of a profit to take. But I don't think anybody went broke taking profits. That's the bottom line. You know what I'm saying? Yeah. A lot of people go broke allowing the lowercase l to become a capital L. And then now we're battling. No, you don't need the headache for that. So I'm like, what's the point in any of this? What are we doing this for? We all want to make money, don't get me wrong. So let me look at my watch list. Let's see what we got here. Let's see what we got. I have, how many stocks do I have on my watch list? 190 stocks, folks. That's plenty. Here are the stocks I'm dealing with, as opposed to your Nike. Here's Alcoa, big company, just broke out. Why can't we trade this stock? Why do I have to go trade SoFi? There's boneheads out there, man. Boneheads. Here's AAOI. I'll just go through some of the A's, some of the B's. Beautiful. I want to trade these stocks. Here's AAP. Consolidating before it takes a move higher. I like it. Resting at 200 EMA. Looks completely different than Nike, doesn't it? 190 stocks, and I update it every other day. Spend an hour, create a 52-week. Oh, here's another one, right at the 200 EMA. Okay. Maybe it's worth to, put credit spread. Here's ADEA. Look at that. I want to trade these stocks. I don't want to trade Nike. I don't want to trade SoFi. I don't want to trade Palantir. I don't want to trade something Hood. And I mean, you do some stuff once in a while when they get to your levels. But like, for example, I waited on Hood, waited. Okay. Now I put the put credit spread on. Now I have a profit. Okay. I'll just wait. I'll add. I'll trade it because I think the downside is arrested. At best, it's going to go sideways. What's good for sideways markets? Maybe sell an iron condor. Maybe start with a put credit spread. Stock moves up. Sell a call debit, call credit spread, which actually just reminded myself. I don't know why I'm not doing that. I think I should. See, it's just came up with that. So 65.60, stock is 70. Put credit spread looks pretty safe. What kind of call credit spreads? I think I'm going to go to 80. Yeah, it's not going to be that much money. 50 EMA is 83. 80, 85 I think looks pretty good. Let's see how much those are going out to April. So now out there, you sold up a credit spread, you're correct. Now you leg into the iron and turn it into an iron condor, right? Okay, 80, 85. Let's see where we are. Yeah, probably not worth much. But something is better than nothing. 80, 85. 40 cents. Okay. 80, 85. Stock is 70. Could that stock get to 80 in the next 3 weeks? Could that stock get to 65 in the next 3 weeks? Sure, it could. But then both sides cannot get into trouble. But I don't think 45 cents is enough. 40 cents is enough. And if I get more aggressive, 78, 82 or something like that. Let's see where that is at. Yeah. 78, 83. 55 cents. Nope, not enough. We don't turn it into iron condor. There was a reason. You start with a put credit spread. Sometimes you leave it alone. Stock has been a downtrend. Like MACD is down. MACD has been under since $140, like under zero. So pay attention to MACD, folks. That's the only indicator I looked, although it's a lagging indicator. Yeah. And so I know what to do. If we do bounce back, if we pull back a little bit more, I'll buy Google again. I think Google is the cheapest Mag 7. Here's Apple. Apple's holding for dear life at 200 EMA. Same thing on NVIDIA. Actually went below it. We're just bouncing up. Everything is bouncing into resistance now. Same thing on Tesla. Bouncing into resistance. This bounce was fine. We had these type of bounces before. You guys see all these bounces, right? The proper trade is wait for the bounce and short these things. And same thing on Microsoft, which is literally selling what it's selling in April. Same thing on Meta. You know, they're all bouncing into resistance, and they're all selling off already. So SPX, where is SPX now? I think we arrested at 200. Yep, we sure did. I will be willing to short SPX now in this rally back up. Maybe I'll go through the futures. And okay, so let's look at some more of my watch list. Okay. I missed a good trade actually. AEHR yesterday. Shit, it's up again. God damn. See, these are the stocks I want to trade. See that? These are the stocks. Uptrends. Give me uptrends. Give me a trending stock, up or down. I don't know what to do. Just give me one. And AEIS. See, that's what I want to trade. I don't want to trade anything else. I want to trend downtrending or uptrending stocks. And that's beautiful bottoming action right there on AER. AGCO, I actually did a great directional on that about 6-8 days ago. I was very close to buying it back yesterday. Didn't do it. It's okay. You know, don't look back, folks. Always look forward. And ADI, good bottoming action, good put credit spread selling opportunity. Same thing on AMD. You know, sideways is good for your put credit spreads, folks. If you're selling premium, right? Decay. That's what you're doing it for. Yeah, I mean, I have 190 of them. I don't know. I don't want to go through all of it. And ATRO. See, I want to trade uptrends. I don't want to trade downtrends. AXTI is getting shot. Holy shit. Yeah, that got a little nosebleed, so we'll wait until it pulls back to 40 and we'll put up a credit spread on that. That's it. You know, I already know what I'm supposed to do. I thought the stock was 71 2 days ago. We're down to 47. That's a wild stock, folks. Yeah, I may even do a 4-legged trade on that. If it pulls back to 40, I'll give it a crack. Sell some put credit spreads, buy some call debit spread. And if it doesn't hold, you take your L. Get the heck out. Period. Don't mess with it. The market's turned off. It's turning down, actually. I don't know. Base metals are rallying again. Century aluminum. Another beautiful chart. Right? Okay. There you go. Freeport McMoran. Bottomed right at the 200 EMA. I mean, if you're going to take a directional or sell put credit spreads, whatever you're going to do, so patience. You got to wait. Patience. And so I do have a very good feel for the market at the moment, which is good at the moment. And then you have retail names that are getting killed. Some retail names are, some are making 52-week highs. For example, Dollar Tree. I traded that quite often. 140 down to 102. Is it bottoming here? It's trying to hang on. It's like it did back here. It's trying to hang on at 200 EMA. Same thing with Dollar General. Big sell-offs on these stocks because of high oil prices, right? 158 down to 118. Earnings are good, but then stocks don't sell for the past earnings. They sell for future. And then on the other hand, you have Ross Stores making a 52-week high. See, I want to trade this stock. Or you have the TJ Maxx making a 52-week high. Walmart looking really good. See, trade some of these stocks. Walmart is green today. Look at that setup. I think it's going to go to 140 probably. So on the next move up. I mean, I'm just saying, brighten your, expand your horizons, folks. There's 10,000 stocks out there. It's not hard to do this. I mean, I'm not going to chew it and do it, but it's not hard to do these. It's just got to spend some time. There's a lot of people, they go like, oh, this guy said so. I'm like, who gives a shit what he said? He doesn't know anything more than I do. More than, it's a buy maybe. 1030 down to 870. Geopark Limited. That's a good pullback to 50 MA actually. MACD is on a sell. That's the only thing I don't like, but we'll give it a chance. GLW, really good looking chart. There you go. Held 50 MA multiple times, and that will go make a 52-week high. I have no doubt. And yeah, I mean, I have 190 stocks, folks. Those are the stocks I want to deal with. I don't want to deal with riffraff. I don't want to deal with some YouTubers bullshit. All I want to do, actually, Monster Energy. I was looking to put in a put credit spread on. Actually, I probably should. Right at 200 EMA, stock was 87, down to 72. MACD's negative. I understand that. Earnings were good, decent. Stock's still a little expensive fundamentally, but let's see what the put credit spreads are there. 70-65s. Not worth it. Not worth it. Nope. Maybe it'll go to directional there. So, when they get to your point, Micron I missed. That was a great directional trade. I missed it. But then it was just base bottomed in the middle of nowhere. And I'm like, I was waiting for it to get to 200 EMA because if 2050 doesn't hold, it's going to get to 200 EMA. It came a little close to it, not really, honestly. But on the next pullback now, I will make sure I trade Micron. Same thing on NVIDIA, same thing on... Yeah, man, you just got to be patient. You just got to be patient and wait. Patient and wait. PLAB, beautiful. IPGP is my next candidate. That's going to be a ripper trade to the upside, a directional trade. Just waiting for it. But yeah, it's not that difficult. Not that difficult, folks. You can trade both ways. Things go down a lot faster than they go up, folks. Understand that. Wow, Western Digital, SanDisk, they're just ripping again. SanDisk, was that up 50 points probably? Yeah, 57. And STX, SanDisk, well, that's a nice chart, man. That's going to rip. Earnings are amazing on these companies, by the way. But then, yeah, actually, SanDisk is expensive. Western Dig. And these are all nice charts. Just trade these, folks. Some boneheads are trading SoFi. I'm like, what the fuck do I have to trade SoFi for? Look at this thing. 33 down to 15, and people go, oh, it's cheap. I'm like, okay, fine. I'll see you at 10. I don't know. I don't pay anything. It's just irritating. People are like, oh, it's cheap. Last famous words. Yeah. Whatever. Whatever. It's all good. Are we going to go red today? Are they really? Are they really? I don't know. Anyway, we'll see. What else is going on? Anybody want to come on? No? Yeah, gosh, did we just miss that trade? Holy shit, Doug. Oh. Yeah, man. Which way? Up, down? I don't know. I can't short that. That's like gone parabolic now. What a great setup that is. Remember, we were buying that thing at 10 or thinking about it at 10. Remember that, guys? Oh my God, it's up to 33. MACD's kind of running out of juice here, but I wouldn't dare short these things, man. The other one is BW. Hanging in there fastly is crazy, though. Breakout came, earnings, right? Those are 14. You're never too late to buy. I'm actually watching AXTI now. If it gets down to 50 MA, I'm definitely going to take a crack at it. Actually, it may get there 47, down to 40. I'll definitely put a position on. Did they do a secondary or something, though? Did they? Nope. Yeah, I'll definitely put on a position at 40. Directional too, probably. Not probably, definitely. Yeah, now I'm chomping on the bit on Google. Maybe a couple day pullback here. Yeah. Make your life easy. Do I like QQQQ? Do I like your iron condor on QQQQ? I guess. I mean, I like iron condors in general, but when the market's this volatile, you gotta be careful with those, especially with your body width and then wing width, wing depth, wing size, whatever you want to call it. You gotta be careful with those. You can get whipsawed. But I like it for theta decay. I think if you put it on today, it probably is a better idea than if you put it on a couple of days ago. Okay, WhatsApp? What WhatsApp? We don't have WhatsApp. A Telegram, you mean? Yeah. GLW, nice chart. Yep. Yep. So anyway, folks, I'm gonna go have a cup of coffee. You know, feels good. 80% cash. Everything turned into profits. Mike, you're reading into too much stuff. This means nothing. You're creating biases. When you do these kind of things, folks, like this, you're creating biases for yourself. Let the price dictate. Price is telling you something. Price looks nice. Chart looks nice. Who gives a shit if institutions owns it, they don't own it, hedge funds own it? It means nothing. All you're doing is just creating validation for yourself. If you needed that kind of validation, then you don't need to be in the stock. You know what I'm saying? I'm not trying to be harsh. I'm just telling you the way I see things. Price takes precedence, then volume. After that, everything is just BS. Obviously, if you're in outperforming names like AAP, GLW, things like that, great. Because when the market does bottom turn, those are the first stocks that are going to benefit from the turn. And that's why I created the 52. We pivoted from doing other different things. But this year, pay attention to find me uptrends and downtrends and trade within as opposed to guess. Because, again, there's 10,000 stocks out there. And if you run a scanner with decent filters, you should be doing good. You know, some of those 52-week highs, I mean, like Raw Stores, TJ Maxx, making 52-week highs. Case closed. I will not trade. They've been going up, by the way, for 6 months now. Will they stop going up? Yeah. Will they roll over? Yeah. And then you can do call credit spreads. But I mean, all I'm saying is that when you do these kind of things, you can feel the rotation. You can see the rotation, right? All the oil stocks were doing it for the first 3 months of the year. Let's look at the rotation. What was going up the first month and a half? Precious metal stocks, base metal stocks, industrials, flying. Trade those. Then it ended. They all started selling off because precious metals sold off because now oil started rallying a month and a half ago. Now get into the oil stocks. Well, now they're topping. Okay, now you just got to rotate out of those and then get back into some of the other stuff. But you need to do this. You need to do this work. You can't just your horizon cannot be like this, like a horse with blinders. Palantir, Nvidia, SoFi, Hood. Done. What? Why? Because people just don't understand. But again, that's what people lose money. I don't care. Whatever. What about market cap? Yeah, so my filters on my scanners it has to be above $2 a share. It has to be liquid enough, like let's say trade at least 1 million shares a day. Market cap doesn't matter to me that much, but then you can set it up for, I don't want to trade micro cap, mid cap, small cap, mid cap, large cap, no problem. I think, what else? What other filter do I have? Actually, I don't even know. Yeah, 1, 2, 3. and optionable. So I can do some option trades. So those 4, if you look at those, it'll spit out a whole bunch of names. Go through them one by one. I tend not to pay attention too much to biotech, because the binary products, stock could go down and up 50% in a day. So I put those away if there is any. But then it'll clearly show you rotation. Like 3 months ago, it was nothing but financials, and then they all disappeared. They would get into their own bear markets. Then it was precious metals, great trade, and then they all disappeared. And then oil showed up. Now they're about to disappear. And then now, if oil is going to go down, what's going to go up? Maybe airlines, right? Maybe they'll start showing up in the 52-week high list again. Or maybe cruise lines, or maybe auto companies, auto parts, industrials, UPSs and FedExs, things like that, right? So understand that there is so many ways to trade, right? And again, we're trading. We are not investing. We are trading. Investing, you create a port, you believe in it, you'll see where it takes you. But that's what is key. Just expand your horizons a little bit. No need to be stuck in some influencer's opinion. And that influencer's opinion is his or hers, and 9 out of 10 times they're wrong. I'm not saying I'm right or wrong. I'm just saying that expand your horizons, figure out a list of stocks that you're comfortable trading, and be rotating. Always be rotating, always be rotating. Because there is trades, and people go like, oh, this market's boring, it's going down. Not if you're in oil stocks for the last 2 months. Not if you're in the refiner stocks in the last 2 months. Look at these stocks. They traded like high-tech stocks. Not boring. You're going to make ExxonMobil, one of the BP, largest oil companies in the world. They went up 40%. Why can't you trade those? Otherwise, you're stuck on some other thing that's just going down and down, trying to catch a falling knife by the handle. Can't make money that way, folks. You just don't. People go like, oh, let me just go do. You go down 40% to go up back to even. Well, why? I don't know. It's something I'm not familiar with. So maybe somebody can come on and explain that to me one day. You know what I mean? Again, investing is different than trading. In trading, philosophy is buy higher, sell higher. In investing, you need to do a little bit more research, more fundamentals, because fundamentals rule. Fundamentals matter, folks. A lot of people go chopsticks and charts, this, that. Forget the charts when you're investing. Fundamentals matter. And that's why the 5 companies I have in my port are not, GME or that type, or HIMS or some other whatever. So good companies, they're not going to go away. The AI effect is not there. Look at the legacy software stocks. Look at Adobe and CRM, ServiceNow, AppLovin, and how many more? Oracle. Down 50-60%, while the market's only down 6% from all-time highs. What about it? I don't want to deal with it. I'll deal with it when they get into a trend. How about that? And if you want to deal with it, you got to short them. I mean, that's it. There's no ifs and buts about it. And if you're not comfortable shorting, then find some other names. Anyway, so I'm going to go have a cup of coffee, finish my day. Really good week, actually, so far. So I may just sit on my hands for a couple of days. Good Friday, markets are closed. I may do a power hour or may not. We'll see. Markets are closed. I don't see the point of doing something like that. So I do 3 live streams a week, Monday, Wednesday, and Friday. Monday, Wednesday, trading with Sergio. Friday is power hour with Sergio. I post all my positions on the community YouTube page of the channel. If you're not subscribed, please go subscribe. Please put a thumbs up. It's free. Go to my website. Subscribe to the free newsletter there. Free, F-R-E-E, free. www.sergioavadian.com. In fact, let's just put it there. It's a great website. And also, you don't have to read, by the way. I made life easy for you folks. You can listen to the articles every Monday at noon. An article will show up. You could be a newbie, you could be an experienced trader or whatever, or an investor. But for me, financial freedom through financial literacy is key, right? and there's many ways to skin the cat. And I created a website. You can listen to the articles. It's in Spanish as well. So go check it out. And if you enjoy it, subscribe. Every Monday at noon Pacific, a new article will drop. And there's already 30 articles in the blog. I started a website a 3 months ago. Pretty soon, I think I'm going to have a Discord for more active traders. We're setting that up. I'm thinking about it still. Free is good, man. The gas prices are 4 or 5. I just paid $6 a gallon for gas. Free sounds good to me. You're getting this for free. Come on now. In what world? Hey. Anyway, so what else? That's about it. I'm gonna go have a cup of coffee. Have the markets closed. Tomorrow should be slow-ish. Although President Trump talking about Iran today. He could say anything. My bet he's gonna boast about. We obliterated Iran. We were 6 months from nuclear war because they were developing warheads. That's my guess. So let's see if I'm right. He's going to go, we destroyed their navy. We destroyed everything. We destroyed the leadership. We're going to leave the country in a couple of weeks. Straits of Hormuz is going to open. Oil is going to tank. Inflation is going to come down. We need lower interest rates. That's my guess. So let's see if I'm right. Maybe I will do an analysis of the speech today. But markets always are listening, like on pins and needles. Like, what did he tweet? What did he say? Like yesterday's rally, right? Although we came from oversold, it kind of coincided with the talk of peace. I mean, if we obliterated him already, first of all, why are we even there? What is our gain being there? I'm not sure. I mean, I'm not a political guy. I know the Middle East really well. I am from there. I don't know what the purpose of that was. Spending $1 billion a day bombing people. I'm not sure. But if oil stays here, though, if oil stays at 100 for an extended period of time, we're going to definitely go on some sort of slowdown, if not a recession, because the consumer is screwed. I'm telling you, I just paid $6 a gallon for gas. I'm in California, $6. I paid $4.50 3 weeks ago. It doesn't bother me, but your W-2 didn't go up enough to, your productivity is not going up by putting an extra $20 in your tank every time you fill up. And then, discretionary spending may get squeezed or whatever. I don't know. We'll see what's going to happen there. So with that said, please stay healthy. May all your longs skyrocket and may all your shorts tank. Expand your horizons, folks. There's 10,000 stocks out there. And out of the 10,000, at least 2,500 are tradable. So find them. Because like Jim Cramer says, not that I'm a fan of Jim Cramer. He's not a fan of me either because he blocked me on Twitter. It's okay. My badge of honor. He says there's a bull market somewhere. That, I agree with Jimbo. Where was the bull market last month and a half? Oil stocks, refiners, pipeline operators, all of that. Hundreds of stocks. Where was it in January? All the precious metal stocks, base metal stocks, industrials. Things will turn. Figure rotation out. Expand your horizon. Create a watch list so we have something to do at all times. Because when institutions are buying something, they're selling something else. They're not going to go flat. They're not going to go cash. Okay, they've been buying oil stocks. Now they'll rotate out of oil. If oil is going to go down, they'll start buying industrials. Maybe they'll buy consumer cyclicals again. Start thinking ahead and participate. Have a good time. Make some money. Because holding a bag and hoping to break even ain't going to make you money. Please put a thumbs up. If you're not subscribed, please subscribe. Please subscribe to my free newsletter as well. And with that said, stay healthy, be well.